conversation with the pioneer of technical analysis in India, only on ET Now.
You're tuned into the FNO show right here on ET Now. Alright, we'll continue with our coverage on the FNO show then, but before we go ahead and get you strategies from Dr. C.K.Narayan, quick disclaimer from our end. Please be sure to consult with your individual financial advisors before taking any trading positions in the derivative space, because while you may land up making windfall gains, you can also land up losing quite a lot on your leverage positions. Bring it back to the discussion then. Dr. Narayan, thank you very much for joining in on the show this afternoon. We've been talking about, range-bound move, Dr. Narayan, a band thereof. Sandeep yesterday pointed out a bear put spread which we could take. He shifted, the range lower from 4,900 to 5,100. It seems that we are on our way to making, a deeper cut now.
Yeah, it's certainly beginning to look that way. We were somewhat hesitantly bullish as of yesterday, I recall. And I had even suggested long future with a protector put at 5,000. Now this was caveated at 5,000 level not being broken, but since it broke in the morning, clearly one should have been out of the future and holding on to the put. So I think that would save a little bit of whatever losses were created. 49.50 is where we hit down last time, and I think we do have a certain amount of support which is present over there. But the way the market is trading down, the kind of speed, the momentum it is showing, the kind of breadth it is showing, it seems really a kind of a question mark whether 49.50 would hold. I would say if we are projecting some sort of a low, then it is much better to take an approach that let that low form, let the market show us that a low has indeed been put in by going up and trading a little higher. At the very minimum for today, for such a thing to occur, I would say the market would have to trade up beyond something like 5,010, 5,015 and probably close above that. Without that happening, we shouldn't really be looking at a low formation no matter what levels it reaches or what support it reaches. Reaching a support by itself is not sufficient. From there, the market has to show a willingness to go up. Without that happening, you will run into problems like the sort we ran into yesterday, trying to pick a bottom. So I would say let it form, let it show strength, and subsequently look to buy the market, as otherwise you have to keep a slight bearish bias.
Alright, so probable double bottom there on the Nifty as we can expect.